Welcome to Furniture Industry News. Today is Thursday, June 18th, 2026, and thanks for spending a few minutes with us. There's a lot worth your attention this week, from the latest read on furniture sales to a big strategic bet from Bed Bath & Beyond, and a surprising turn in how shoppers are using artificial intelligence. So let's get into it. We'll start with the numbers everyone watches. Furniture and home furnishing sales declined again in May, but here's the encouraging part. The drop was a lot smaller than it was in April. According to the U.S. Department of Commerce, the category came in at an estimated $11.2 billion for the month. That's down just over 1% from a year ago, but it's a full percentage point better than April. So the gap is narrowing, not widening. Through the first 5 months of a year, furniture has pulled in about $53.7 billion, which is down a little over 3% from the same stretch last year. Now, here's the part that should really get your attention. While furniture is still running behind, the rest of retail is having a strong year. Total retail sales in May were up almost 7% compared to a year ago, and building material and garden supply dealers, which is a useful stand-in for the home category, were up more than 5%. So what does that tell us? Consumers are clearly spending. They're just not pouring that money into big-ticket home goods yet. That gap between a healthy retail economy and a soft furniture category is really the story here. It points to demand that's building up and waiting for a catalyst, most likely more movement in housing and some relief on interest rates. For operators, the takeaway is to plan your promotions and your inventory for a recovery that's going to come in fits and starts, not one clean rebound. Now let's talk about something that's reshaping retail in real time, and that's artificial intelligence in shopping. This week, we got 2 sets of data that point in opposite directions on how people feel about AI, but the same direction on how much they're using it, and that direction is up. First, the usage. Adobe reported that traffic coming to U.S. retail websites from AI sources jumped 138% compared to a year ago, and since October of 2024, it's up more than 1,300%. That's a new record. Even more interesting, the shoppers arriving through AI are converting 54% better than people coming from other sources, and they're spending about half again as long on the site once they get there. So this isn't just curiosity traffic. These are serious buyers. But here's the twist. A separate survey of just over 1,000 consumers, conducted by the marketing agency Fractal and shared with Chain Store Age, found that while 7 in 10 people say they're using AI search more than they used to, their opinion of it is actually cooling. Just over half now say AI is more helpful than traditional search. A year ago, that number was more than 8 in 10. And the share of people who say AI is actually less helpful than regular search jumped from 3% to 17%. There's a trust question wrapped up in this too. The percentage of consumers who say heavy use of AI would make them trust a favorite brand less doubled, up to 40%. And when it comes to product recommendations they'd actually buy on, people still trust Google about 3 to 1 over AI tools. There was one finding that surprised a lot of people. It's the boomers, not Gen Z, who are the bigger believers in AI search. 63% of boomers said AI is more helpful than traditional search, compared to just 47% of Gen Z. And 8 in 10 boomers expect AI to replace search engines within 5 years. So the least AI native group is actually the most convinced it's inevitable.
So what should furniture professionals do with all of this? A few things. AI shopping is no longer a future trend to keep an eye on. It is sending real, high-converting traffic to retail sites right now, and that traffic is worth more per visit than it used to be. In fact, Adobe found AI visits are now worth 53% more than non-AI visits, which is a complete flip from a year ago. That means your product information, your specs, your descriptions, all need to be written in a way that AI tools can actually read and understand, because Adobe noted that a meaningful chunk of website content is still getting overlooked by these tools. But at the same time, watch the trust signals. Consumers overwhelmingly want AI-generated content to be labeled, especially video and images, and younger shoppers in particular will penalize brands they see as over-automating. So the smart move is to use AI to help customers find you, but keep a clearly human voice where they can see it. Now let's shift to one of the boldest strategic moves we've seen in home retail in a while. Bed Bath & Beyond has signed a deal to acquire a company called Fathom Holdings, and this is not a home goods company. Fathom is a technology-driven real estate services platform. It brings together residential brokerage, mortgage, title, insurance, and homeowner financial services, all powered by its own cloud software. So with this deal, Bed Bath & Beyond is pushing way beyond selling things that go inside a home and moving into actually helping people buy, finance, and insure the home itself. The company is calling this its everything home strategy. The executive chairman and CEO, Marcus Lemonis, put it this way. He said home ownership remains fragmented, with people buying their home from one company, financing it through another, and furnishing it through a third. The idea is to pull all of that under one roof. The financial terms weren't disclosed, and the deal is expected to close in the second half of this year.
So why does this matter to you? This is an ambitious bet that the home retailer of the future sells the entire journey, not just the contents of a room. If it works, Bed Bath & Beyond could reach customers at the exact moment they buy or finance a home, which is the highest intent furniture buying moment there is. For regional and independent retailers, this raises a real strategic question. Do you try to compete across that whole life cycle, or do you stay focused on doing one thing better than anyone else? It's worth watching how the integration goes, because bolting financial services onto a home goods brand is a lot easier to announce than it is to actually pull off. Let's stay on the earnings front, because La-Z-Boy also reported its fourth quarter. The big theme here is the power of owning your own stores. La-Z-Boy posted about $570 million in total quarterly sales, which was essentially flat against last year. But the company-owned retail side did the heavy lifting. Written sales at retail rose by double digits, thanks to new and acquired stores. Same-store written sales did slip, mostly on lower traffic, but that was partly offset by higher average tickets and stronger design sales. Company-owned stores now make up a majority of the company's total network, and a record share of it, which the company says is a central pillar of its Century Vision growth strategy. On the wholesale side, sales declined modestly, pressured in part by a transition with an international customer. For the full fiscal year, consolidated sales rose about 1% to roughly $2.1 billion, and the company pulled off its largest store expansion ever, while ending the year with strong cash and no external debt.
The lesson here is really about controlling your distribution. When the wholesale side softens, owning the stores lets you capture the full margin and the direct relationship with the customer. And La-Z-Boy's strategy of buying up independent dealers and opening new locations is paying off precisely because the industry is soft, which lets them gain share while others pull back. For independents, that's a signal worth sitting with. Vertical consolidation in retail is accelerating, and the brands you carry may increasingly want to sell directly themselves. And across the board, the message is the same. Traffic is down industry-wide, so conversion, average ticket, and design services are where the quarter gets won. One soft spot worth noting. La-Z-Boy's direct-to-consumer online brand, Joybird, continued to struggle, with the online consumer hit harder by the economic and industry headwinds, even as the store-based business grew. And one more story before we wrap. Bed Bath & Beyond is also making a play to win back the back-to-campus season, a category the old chain once dominated. The new hybrid Bed Bath & Beyond plus container store concept has set up a dedicated college living section across all 97 of its hybrid stores. That includes bedding, storage, everyday essentials, and decor. Bedding items like toppers, comforters, and nail-free headboards start around $90, and everyday essentials run $40 and under. The company's president, Amy Sullivan, framed the whole thing around the emotional moment of college move-in and the things students actually need. There are extended assortments online, some small space decor through the Kirkland's brand, and summer promotions and move-in checklists for shoppers who opt in. Why care about dorm shoppers? Because back to campus is one of the few reliably seasonal demand spikes in home goods, and it builds loyalty with people right at the start of decades of forming their own households. Here's the real point for furniture and home retailers. Don't overlook the small space first apartment buyer. Today's dorm shopper is your sofa customer in 3 years. Capturing that relationship early with affordable entry-level products is a long game that's absolutely worth playing.
So to bring it all together, furniture sales gap is narrowing, but the category is still trailing a strong retail economy. AI is becoming a real and valuable source of shopping traffic, even as trust in it softens. Bed Bath & Beyond is reimagining what a home retailer even is on two fronts. And La-Z-Boy is showing that in a soft market, owning your stores is a real advantage. That's the briefing for today. If you found this useful, we'd love for you to subscribe and keep listening so you never miss what's moving in the furniture industry. Thanks for joining us.